Hey, good morning, everybody. Welcome this Friday. It is the 12th of July, almost halfway through the month. Hope you're doing well. Prepare for a great weekend and some fun and excitement around. Get a little downtime. Hey, before we get started today, yesterday was kind of it was a mixed bag yesterday. We'll talk about that more when Dave joins us here in just a few minutes. Hey, but don't forget that in this world we live in, there are so many things that are out of our control. I want you to know that you can take control of your investment portfolio by knowing the amount of risk you have in that portfolio versus the amount of risk you should have in that portfolio based on your age, your circumstances, how close you are to retirement. There's a lot of things that go into what your risk should be. That's why I developed the core retirement design to help walk you through that and to help you prepare for the retirement you always dreamed of. Give us a call at 863 382 0037 to schedule your core retirement analysis. We got Dave coming up next.
Oh, 5.7 Light FM calling says wherever you go, I'll be there. That's because I'm streaming worldwide at 1057lightfm.com. You can fit me in your back pocket. Shower first, would you? It's 8:41. Time to check in on money and find out how Wall Street's treating us this morning. We had consumer inflation yesterday. We got wholesale inflation today. And it's a high holy day because earnings season begins in earnest. All of that requires the resources of Phillip Statler from Statler Financial Services, who's on the phone this morning. Phillip, good morning. How you doing?
Hey, good morning, Dave. They're doing well. Heading into the weekend. Excited about a little downtime. Grandson's second birthday parties tomorrow, so got a lot planned this weekend.
I am glad, and I'm glad you're looking forward to family events to enjoy it. Me, I'm going to vegetate, play a couple of rounds of golf, and just say to heck with the world because I'm tired. Back up to yesterday, this is interesting. We were talking before we went on the phone. There's some sort of a strategy shift going on in the big money, guys. Yesterday, the Dow gained a little, 32 points, but it was the only green one among the three major indexes. Standard & Poor's lost almost 0.9%, down 49. NASDAQ lost dang near 2%, down 364 points yesterday. I don't have the Russell, but did they go up yesterday, or did they just go to the smaller decline than the others?
No. They were up yesterday. They were up 3.5%.
And that tells me something weird is going on because all for the last 3 months, Dow has been the laggard. Standard & Poor's and the Nasdaq's been going crazy, and they've been beating up the Russell 2000. And we're now sitting there. We're doing blue chips and small caps, and the Magnificent Seven on Nasdaq are getting their butts handed to them on a platter. There's got to be a strategy change going on somewhere, and I don't believe it all comes out of the CPI reading from yesterday.
No, I don't think so. But let's face it, that a lot of those NASDAQ stocks, it's been on a run, right? And so there becomes this time when you got to rebalance because your portfolio is based on percentages. Mm-hmm. And so when that happens, then they've got to, sell out of their positions in those high flyers and reallocate some of that money back to some of the ones that have lagged behind.
Absolutely, which is kind of why I think I'm seeing a strategy change going on. We're doing a rebalancing number on some of the big hedge funds and major fund movers because it looks like the futures this morning are kind of reflecting the same thing. Not with those numbers as big, but still, I'm seeing blue chips getting a little bit of love, and I'm seeing the broader big stocks and the Nasdaq exchange getting beat up a bit. It's kind of interesting. We did consumer prices yesterday, and as expected in the press conference last night, President Biden said that he had the lowest inflation in 3 years, and prices actually are going down. He said groceries are going down, cars are going down. He didn't mention the fact that auto insurance is up, let me see here, by 19.5%. Yeah, used vehicles are down by 10%, but the inflation goes the entire gamut in both directions down the line. But we were down 0.1% on the consumer price index yesterday, and that gave President Biden some fodder in his press conference last night. I'm going to bet that he probably isn't going to be bragging about the wholesale inflation rate because the first blush on last month's wholesale inflation rate, they expected a 0.1% increase. we got double that, 0.2%. You analyze that, we're looking at 3.5% inflation on the PPI.
Yeah, yep, and so that's a pretty substantial increase there. And so in the core number, we haven't seen it come out yet across any of our tickers. So not sure exactly where that's going to come in, but that's not where we want to be.
No, the indications are we're not necessarily going as fast toward that target 2% rate the Fed wants. Obviously, the last week of the month, we end up getting the personal consumption expenditures rate. That's what Jay Paulson and his minions look at. But still, we've got a mixed bag picture on it, and we've got Federal Reserve guys doing the rubber chicken circuit daily. Yesterday was getting some free food. And he's saying now that the economic data justifies an interest rate cut, and the odds makers in Chicago are now saying there's an 84% chance of an interest rate cut in September. And that's going to fly in the face of my conventional wisdom anyway, and I'm not sure on an economic basis I could justify it either. If I were king of the world, I'd say November might be a better idea, wouldn't you?
Yeah, I would too, Dave. Yes, we're seeing some progress, but not enough progress to justify a rate cut yet. My fear is if they go in there and cut too soon, then they're not going to help us out any when it comes to inflation numbers. We'll just, make a little U and go back up the wrong direction.
And that's kind of the concern I get when I follow the M2 money supply a lot. It has unexpectedly grown for the last 3 months. I don't have the June number yet. But until the normal flow of increase in money supply catches up with the curve that we bumped up when we were pumping money into the economy during the pandemic, I don't see inflation getting back down to 2%. That's kind of why I'm saying if I were king of the world, November would be about the earliest I'd look at it, not because I like high interest rates, but because we've got to let the economy grow into the money supply that we've got because we pumped an extra $5 trillion into it across 2020, 2021, and early 2022, and we got to catch up with that before the inflation rate will end up will stop growing.
Yeah, and I'm just looking forward to that point in time when we see prices finally level out and actually go down a little bit.
It would be a nice thought. The other thing that's going on, and I'm kind of wondering whether the 84% number that Chicago is quoting is going to happen after the producer price number. It'll be interesting to see whether they revise it downward. The other side off of it is we've got the beginning of the real earnings season going on. The first category always to report is the big banks, and we've got some upsies and some downsies going on, and Wells Fargo is almost becoming a traditional downsy. How did they do last quarter?
Hey, they actually did okay from an earnings standpoint in terms of compared to expected. Earnings per share, $1.33 versus $1.29 expected. They beat on revenue too,
Cool.
by I don't know, almost $500 million. But the flying ointment for them is the expected net interest income they were expected to earn, and it declined 9%. Over the quarter, and that was not what Wall Street had expected from them, and so that actually has them trading down this morning, substantially down, almost 5.5%.
How in the heck can you miss on interest income when you're a bank? And I mean, the cheapest car loan you can find is 6.5% these days. I would think they'd be making money hand over fist on that category.
You would think, but maybe they're having to raise interest rates on the other side to get deposits in. So,
not off of my savings account, they aren't. I can tell you that from personal experience. But anyway, I was going to say when you said their revenue was up and their earnings per share was up well over what they expected. So let's beat them up. Let's beat up on J.P. Morgan. I do have them as being a positive.
J.P. Morgan, they also had a good quarter. They beat on earnings by a little over 10 cents a share. So that was good news for them. Their revenue was ahead of expectations too, and that earnings number is adjusted. Evidently, they had a big gain on something from Visa. Profit that they had from them. So they really had a good quarter if you roll that stuff into it. But they're trading down too. They're down about 1/3% right now.
Any possibility there's a common thread here about bad debt allowances? That was something we were kind of told the analysts were going to be looking at carefully.
It could be, but it's not showing up in any of the cursory reports that we're seeing anyway.
Okay.
But I will tell you, Citigroup, they also reported they had a great quarter. They beat they came in at $1.52 versus $1.39 on earnings per share. Revenue slightly above expectations. They really credit the CEO for her turnaround plan, and that it's really starting to come to fruition. And so they are actually the big winner today, up 2.8% when it comes to banks.
I'll see you. Those 25 and 30% credit cards do wonders for a bank.
They do. They do. So, that's the only other company I have that reported, Dave, is a company called Fastenal. And they're in the industrial construction type of industry. And they had a great quarter. They beat on revenue expectations. Earnings were in line with where they should be. And they're trading up today 6.75%.
Cool. I'm not even sure what they do for sure, but I think they got a location here in Sebring, so it's good to hear they've got it going. Resetting the table, up day on the blue chips by a little, down day on the adventurous NASDAQ side of the fence by a lot yesterday. 45 minutes before we opened with the financials starting to kind of set a tone that I'm not sure I like. How are we doing 45 minutes ahead of the opening today?
Well, Dave, everything's kind of swinged around to a positive territory right now. The Dow's actually up almost 0.25%. The S&P 500's up between a tenth and 0.2%, as well as the NASDAQ 100. Again, Russell 2000 is making a big comeback, up almost 1.5% this morning. And then we look at the commodity side of things. Silver down 2.7%. $30.81, still above 30, so doing well. I saw a little article said that gold and silver are in maybe in a breakout graph right now. Gold's down 0.75%. Crude oil's up the wrong direction, Dave, up 0.9%, $83.34 a barrel.
Well, shucks. I got a weird picture over on the Asian Rim this morning. It's mixed all over creation. Mainland Chinese markets are on balance about flat. The Hong Kong market, on the other hand, is having a party, up 2.5% at the close this morning. Japan's down by about the same percent, called net in the Asian Rim, flat, but it's all over creation. European stocks up marginally this morning, between 1.5%. Let's see, I don't see any red ink this morning. The UK market is off by about 0.25%. Everything else is up by about 0.5% halfway through the European trading day. Keeping tabs on a retirement account, making sure you can retire the way you planned on it, that takes expert eyes. How do I find your eyes to make sure I can retire, Phillip?
Yeah, that's why I developed the Core Retirement Design. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then catch a Statler Financial Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back here on Monday morning with a look ahead of what affected your money over the weekend and what's likely to do it on Monday for you or to you here on Light FM. Catch you shortly, my friend. I appreciate it.
All right, buddy. You guys have a great one.
Be well. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Have a great day. We'll be on sabbatical for a couple of weeks. And so we will be back in touch with you on social media sometime in the middle of August. Hey, take care. We'll talk to you real soon. Enjoy the summer. Bye now.